Here's your Forbes Daily Briefing for Thursday, February 20th. Today on Forbes, the best small businesses to buy now. In 2024, small business buyers weren't looking for dessert. Instead, they were looking to sweat. Fitness businesses got more expensive and ice cream shops got cheaper, according to data from BizBuySell, an online marketplace for small businesses and a division of Arlington, Virginia-based CoStar Group, which has a $30 billion market capitalization. Gyms saw their price-to-revenue multiples jump from 0.72x to 0.85x, an 18% year-over-year increase, the biggest gain among 23 small business sectors it tracks that had greater than the median number of transactions in both 2023 and 2024. Ice cream shops, 0.56x down to 0.54x, and hair salons from 0.52x to 0.5x, meanwhile, tied for the worst performance, with both seeing their price-to-revenue multiples drop by 4% from 2023 to 2024. Price-to-revenues, or sales, represents the amount acquirers are willing to pay as a multiple of an enterprise's annual revenues. While many small businesses routinely change hands at less than 1 times annual sales, the large publicly traded companies in the S&P 500 index trade for an average of more than 3 times revenues, and tech companies like Apple command more than 9 times annual revenues. The highest price-to-sales ratio among the 9,530 deals that BizBuySell surveyed in 2024 came from bed and breakfast establishments, which changed hands for a median price of $1.5 million, which was an average of 2.76 times annual revenues. The lowest multiples came from car dealerships, which sold for 0.23 times revenues and had a median sales price of $600,000. The market shift evident in BizBuySell's 2024 report reflects a change in how people have been approaching fitness. U.S. health club memberships topped 70 million in 2023 for the first time, according to the Sports and Fitness Industry Association. More people are exercising on their own, too. 156.1 million reported running or walking for fitness, the highest number ever recorded. According to the Sports and Fitness Industry Association, 15% of fitness clubs shut down during COVID. That means demand is up, supply is down, and small business buyers think fitness, not indulgence, is the future. Lisa Riley, founder and president of Scottsdale, Arizona-based Delta Business Advisors, a business sales brokerage, says, quote, "We're on a health kick as a society." But the fact is that fitness brands come and go. What's hot today will be tomorrow's punchline. Just ask anyone who bought Sweatin' to the Oldies VHS tapes or threw punches with Billy Blanks in a Tae Bo class. More recently, spin and CrossFit had their moments, but participation in both has dropped more than 5% over the last 5 years, according to the Sports and Fitness Industry Association. And the days of fighting for a spot in a SoulCycle class are over. Now there's plenty of room, if you can find a studio. Peloton hasn't fared any better. Its stock is still down more than 50% from its pre-COVID initial public offering, not to mention the 90% plus plunge from its pandemic-induced bubble peak. Daycare centers and convenience stores were 2 other big winners. Riley says that daycare centers, where the price-to-revenue multiple rose by 16% last year for an average of 0.85, have benefited from 2 tailwinds. The gradual shift back to in-office work has pushed up demand, while COVID wiped out many providers, shrinking supply. Convenience stores, which sold for a median price of $200,000 and an average of 0.41 times annual sales, have always been a strong market, but Riley says the prospect of tighter U.S. immigration policies has made them even more appealing. These businesses have long been owned by immigrants and those looking to immigrate. With stricter visa policies on the horizon, buying a convenience store could provide a legal pathway into the country. For full coverage, check out Brandon Kokoden's piece on Forbes.com. This is Kieran Meadows from Forbes. Thanks for tuning in.